Hello, everybody, and thank you very much for joining me today. It's Allan Berry Reports, Allan Berry Laboucan with the Rocks and Stocks News Report. Got to get that right, Rob. And
Dude,
we got a special guest here in Rob McEwen from McEwen Mining and McEwen Copper. They've been very busy campers lately. Rob, thank you very much for joining us to come talk to our audience.
glad to be on, Alan. Thank you.
Well, back in the September-ish, we had a chat, and I made my case of why I thought you guys were undervalued, and you've added a lot of value even since 2023 has rolled around. You've had quite a good run of news there, Rob. You had excellent drill results out, and then you announced just last week. Let me get the headlines here. January 26th, McEwen Copper, Los Azules, robust assay results. February 27th, McEwen Copper closes investment by Stellantis. And then on the same day, McEwen Copper announces an additional investment of 30 million US dollars by Nuton, a Rio Tinto venture. Got lots to unpack there, Rob. Let's start wherever you want to start.
Okay, well, the big mover right now, probably 2/3 of the asset value of McEwen Mining is showing up in our copper asset that we've started funding last summer. Well, I put $40 million in I guess it was the summer of 21 when we said we want to spin this out.
Right.
And it took about a year to close our financing. So I put in 40 and then we got another 82 million. And of the additional 42 million that went in to get to 82, 25 of that came from a company called Nuton, which is a venture arm of Rio Tinto. So Rio Tinto is the second largest mining company in the world. And so they have this technology which they think could apply to our property and increase the recovery rate on a heap leach operation significantly and shorten the recovery time to a quarter of what is normal.
Wow.
So they were looking at our property, and then their parents said, well, why don't you buy $25 million worth? Because this looks like an interesting property. We then were talking to last fall's a number of automobile companies because they said they were all looking to produce electrical vehicles. And we said, well, you're going to need a lot of copper, not only for just wrapping around the engine, but also for your, all the wiring in the car. And electric vehicles have about 140 to 180 pounds of copper in them, much more than a internal combustion engine. So Stellantis, which is not a name that I recognized immediately, is the fourth largest automobile manufacturer in the world. And you go, well, I've never heard of them. Well,
They sure have a heck of a group of brands that they make.
Well, right. I mean, they're Dodge, Jeep, Chrysler, Peugeot, Renault, Maserati, Vauxhall, Opel, Fiat. There are all these cars that we all know their names, but the umbrella corporation, Stellantis, is a bit of a misnomer. So back and forth. They and their predecessors have been operating in Argentina for over 100 years. They generate profits in Argentina. And when you generate profits in Argentina, it's often hard to get them out of Argentina whole. There's frictional costs, and sometimes it could be quite a bit. And they didn't want to see the money go out, but they wanted to invest in our project. So they came in, and last Thursday we announced that they were investing 30 billion, not million, 30 billion Argentinian pesos. And that was equivalent to in their press release, they said $155 million, real dollars,
US dollars.
US dollars. Yes, sir.
Okay.
And they acquired a 14.2% interest in McEwen Copper. And it was two transactions. One, there was a primary transaction where McEwen Copper sold shares directly to them, and McEwen Mining sold shares to them. So that was one part of the deal. The other part of the deal was that Rio Tinto, which I mentioned earlier, number 2 mining company in the world, came in and said, well, we want to up our bid. We want to own the same as Stellantis owns of McEwen Copper. And they moved from 9.7 to 14.2. And to do that, they paid $30 million, US dollars, real dollars, to get that. And it also was a primary and a secondary. So
now both companies are shareholders of McEwen Copper and McEwen Mining.
not of McEwen Mining. No,
Okay.
McEwen Mining sold shares of McEwen Copper.
Gotcha,
to each of them.
gotcha.
So,
Okay.
but they both own 14.2%. So together they're at 28.4% of the company. And they insisted that they have a right to participate in all future financings and maintain their ownership. They're each entitled to a board seat, and they've exercised that. So the Stellantis transaction is closed now. Rio will close before the 10th of March.
Okay, now there's a couple of things that there's more to this story than the cash that they put in. First of all, with Nuton, they've been working with you guys for a while, and I'm imagining they've done a significant amount of studies using their technology on your project and have doubled or more their position during this process. Is that correct?
They're still doing their work on the project. They view this as a strategic investment that they'd like to be long-term. And that was conversations I had with the head of their copper division, of Rio Tinto's copper division, and also the chairman of their board. So it's great. They do a lot of research. They have you can go online and see the mine of the future. That they had a very automated mine that was they had a control center in Perth, and about 1,000 miles away they had their mine, and the trucks were automated, the drills were automated. Mechanics flew in when they had for regular maintenance, but you're looking at a big company that spends a lot of money on research, and it's a welcome partner to go and see what they're doing and things that we might be able to pick up and utilize going forward.
Well, and the potential to recover more and do it faster is goes right to the bottom line on the margin increase.
Exactly. We're expecting to get some of their preliminary results in the next month or so. And it was going to go into the PEA that we're updating right now. And we're going to go from a PEA as preliminary economic assessment. We've done a few of them because, everybody's experiencing inflation, and the mining industry is seeing the cost of consumables going up and materials, capital goods. So we wanted to have a more current number. And we switched our process a bit. We were going to use the conventional method of most copper mines as a mill and flotation and producing a concentrate. Where we are in Argentina, San Juan province is very much a mountainous province. There's probably 10% of the land at most is arable. The rest is mountains. And water is quite important for agriculture. So by going to a heap leach to produce the copper, we reduce the capital amount because you're not building a mill and all the associated infrastructure, and it uses a whole lot less power. So it's really taking heed of what the community needs. We have a community office in the closest town and another office in San Juan, which is the province and capital, provincial capital. So it's moving along nicely. We had originally thought we'd update the PEA, and that would form the basis of doing the IPO. At the moment, with this funding, there's no need to raise additional capital. And as I mentioned earlier, we financed last summer at $10 a share of McEwen Copper. Rio came in at 18.75. And if you look at Stellantis just using the pesos and converting it at the official Argentinian exchange rate, it'd be 38.70 a share. This is a big project, still viewed as one of the 9th largest undeveloped copper projects in the world. And there are a number in that top 10 that probably will really have a hard time being developed, either because of altitude or significant environmental issues to overcome. So we think we're in a good position. We're well financed. And as I said, there was a part of the deal was primary financing, buying shares of McEwen Copper directly from the treasury of the company. And another portion that was McEwen Mining selling down its interest. So selling its shares of McEwen Copper to these two companies.
To make everything work.
Yes. So
the last time we spoke, I think it was a couple months ago, Rob, I was really intrigued about the efforts you guys are making to make this a green mining for green energy story. And also at that time, you had just sort of started working with Nuton and the potential there. And one question that I had asked you was, when you do an updated PEA, did you think that you would be able to incorporate their work into the PEA? And you weren't sure at that point in time. This is an important development because that has the potential to significantly affect the preliminary economic assessment.
Yes. We'll have a base case, and then where we're using conventional methods and recovery rates, and then an area where you can see the upside and incorporating the preliminary results from Nuton. I mean, there's still more metallurgical testing to do, but we'll include that so the readers can see how much of an improvement can occur from that technology, which
I mean,
appears to be significant.
Without putting the numbers on it, the ability to increase your increase your recovery rate and decrease how long it takes you to get that metal out of the ground or out of the rock has significant potential, I think it's fair to say at this point in time.
Yes, very definitely. It's a very interesting development because as I said, they want to, in any future financing, they basically want to be there, able to maintain their combined 28.4% of the company.
You know, Rob, I spent a good portion of my career in diamond exploration, and this recovery thing is really important to me because you're looking for tiny little diamonds in a volume of rock, and trying to get that out of there without breaking them, and is very crucial in the process. And So this stuff about being able to bring down or increase your recovery rate and make it happen faster is quite exciting to me.
Yes, as well to us, Alan. It's
Yeah.
so
Now,
the
go
other
ahead.
benefit of this is, as I mentioned, that McEwen Mining sold down some of its interest. So that's injecting $47.5 million into the treasury of McEwen Mining. So that will allow us to reduce our debt by 38% from 65 to 40. It'll cut out the associated interest cost that was associated with that debt. But it also, from a balance sheet standpoint, not only is it increasing the cash and reducing the leverage, it's also, this transaction has lifted the value of our investment in McEwen Copper. So we were, prior to this investment, 68% of McEwen Copper, and that's been reduced to 52%, but that's been offset by the increase in the value. So we went from 68% of 260, which was the implied value based on the financing we did last year, was about 168 million. And 52% of the new implied value of 550 million for McEwen Copper is 290 million. And
But
so
in that,
that becomes the equivalent of $5.70 a share based just on the McEwen Copper asset holding.
and if I'm looking at this correctly, that's based on the valuation of Nuton's investment, not the valuation based on Stellantis's investment at $38 equivalent a share.
That's correct.
So there's a big jump there between 18 and 38.
Yes, yes, there is. There is.
So,
And
and
I've always felt that we had McEwen Mining shares had a value of between $7 and $28 a share based on the current prices. And I used two public value numbers of looking at two other copper projects in the same province in Argentina. One was bought in April of last year for 485 million. And the other one currently has a market cap of 1.9 billion.
now, when we discussed this last time, you also made some very important points in that 2 billion valuation company is quite a bit higher elevation. And secondly, you have a higher grade.
We have a higher grade, we have a larger resource, we're at a lower altitude, we're closer to infrastructure, roads and highways. So there are a lot of positives about the
That's
positive.
not a lot of arm waving and using that one as a comparable.
Yes. So somewhere in there, we're somewhere between that 500 million and almost 2 billion value.
One might be able to make an argument that you might be worth more than that. Now, of course, they're further along in their, I think
In
they're
their
at,
development.
yeah. So, but still, there's a little bit of blue sky in there.
That's right. I think BHP put 100 million into them recently. So BHP's made an announcement they're looking more at Argentina. And what's happening, it's really curious because this transaction is the first time that an automobile company has invested directly into a mining company in copper. They've been doing it in lithium, they've been doing it in nickel, but they haven't done it in copper yet. And I think we're going to see, I mean, you look at the geopolitical issues that are going on around the world, Ukraine, the sanctions thrown against Russia, thrown against China, China's actions in the China Sea that are threatening Taiwan, and just saying the global trade that we enjoyed, the free, open global trade, is being broken apart right now.
Yeah.
And so, and countries are coming along and saying, well, we have to secure all our critical minerals and other metals within our borders.
And as
And
close as you can get to the market you're trying to tap into.
yes, but say Make America Great is all about everything in that product being made in America.
Right.
And that seems to be happening in other countries around the world. I did see two graphs recently, and it showed the number and the amount of metals made in America, produced in America, compared to the same number of metals and the amount made in the combined countries of Russia and China. And it was shocking how little America is producing right now. And yet the demand is to have everything sourced at home. And so it's really, well, how are they going to pick up speed? I mean, we really have to change regulations quickly
Like that.
because the costs to bring these projects on and the time right now is not measured in, the flick of a light switch, and it's not in a couple of years. I mean, you're talking 10, 15 years.
10, 20 years.
Yes.
And I've said it before, Rob, that economics have a way of fixing stupidity and mistakes. And in the case of the world, you look at the world and where everything's coming from, and you talked about those geopolitical issues, but there's also the shipping costs of moving all of these goods
Yes.
around. And I've said for a long time that I can see that countries are going to have to start making things at home again. I remember when I was young, everything was made in the USA, made in the USA. Now nothing's made in the USA.
Yeah, well, China became the factory to the world. And I think of going to Home Depot and buying a power tool or something. And always thinking they're getting cheaper and cheaper. I mean, they have more features in there. But if we have to make it at home, it's going to become a lot more expensive because we shipped all of our production facilities over there, and they were huge in terms of
And
scale.
there's no way to get around that, Rob. There's no way to get around the fact that you got to start making stuff domestically.
Exactly. So when you look at what countries are doing and recognizing, the automobile industry is looking at that as well and saying, well, it's going back to the days of Henry Ford when he had rubber plantations in the Amazon to make his tires. He went up to Michigan to get copper for his copper. He went to Sudbury and investment in nickel mines up there. So everybody's trying to become vertically integrated, recognizing that the global trade network seems to be fragmenting, and they are looking to secure their source of product so that they have it, because they might not be able to get it the way they used to.
Yeah, it's not just even making it domestically, it's also securing that supply.
Precisely. So we're in a rather interesting situation, I think, because you have a major producer that can build mines, that and you have a major consumer as shareholders.
That needs the what you mine.
Yes.
And getting back to the asset, you have a project that has a long mine life to be able to supply. I mean, you could theoretically supply Stellantis for decades, all their needs.
Multi-generational mine we have. I mean, in the PEA that was done several years back, it envisioned a 36-year life, and that was only mining 55% of the deposit.
Holy, and look at these recent results that you guys, significant drill intercepts, 237 meters of a percent copper, and multiple copper mineralized horizons, including disseminated and veinlet hosted primary copper mineralization we've talked about this before, Rob, in that the potential to grow the resource is quite significant. You guys have kind of not needed to, because 3.5 decades of, kind of doesn't need to get bigger, but you have that ability.
Yes, it could be a major center. And with the geopolitical issues that are going on in Peru and Chile, people are looking across the border at Argentina. I mean, the politics in those two countries, which provide 40% of the annual production of copper in the world, they're looking at more taxes. They're playing with the idea of nationalization. They're really discouraging future investment in those countries.
And they're crucial. And at any time, we're so low on the inventories of copper in the warehouses that, if there was a strike, which often happens when copper gets high priced in Chile, you could knock that down to hours, not a few days, in the inventories.
Yes, yes.
So there's explosive potential in the price of copper.
So copper is, a lot of people are forecasting deficits in terms of supply. So that's good. And then our gold and silver assets have been turning out, it looks like they've stabilized. And we're seeing, for our guidance this year is larger production, probably 10% higher than last year, or more, and lower costs, 5 to 10% lower costs. So our Fox complex is down around $1,000 an ounce cash. Gold bar is a little higher at 1,400, and San Jose is around 12. We've got a PEA to expand the production at Fox. We're looking at building a new facility in Mexico. We bought a whole process plant very inexpensively. It was sitting in a yard in crates, and we hope to start construction of that at the end of this year. Start pushing a ramp down in Timmins this year to move to a 80,000 ounce producer, about $800 cost. And our balance sheet we're reducing the debt. And we, from a technical standpoint, looking at the stock, we have broken the 50-day, 100-day, and 200-day moving average on the upside. So
yeah, you went through a golden cross in late December. The 50-day went through the 200-day. The 50-day is now trading significantly above the 200-day, and both your 50-day and your 200-day are in a bullish trend.
And we came down a long way, so there's a lot of room on the upside. There are a number of resistance points, but we're working out one of them right now. The next target would be 10 or higher. And
you're not the only gold producer that is working on bringing their costs down and increasing their grades to improve their margins. And it's very encouraging that you're going in that direction. But there's sort of a lottery ticket that I don't think people really understand about your Timmins stuff, in that you're in those old greenstone rocks that, tend to be these orogenic gold systems that go on very, very deep. And as you get deeper and closer to the heat engine, you get these fabulous grades that turn into high margin projects. And I don't need to tell you about the importance of high margin projects in a gold company, because at one time your Gold Corp was the lowest cost producer in the mining business, and was one of the best performing gold mining stocks.
Yes, I mean, high grade makes a huge difference. Our average grade was 68 grams per ton. It was just a treasure trove. And it was found at the bottom of an old mine that everybody thought was going to close. And they'd had, for 15 years, they hadn't spent any money on exploration. And that's where I saw the opportunity. And I think our Timmins camp, while I can't promise anything like a Gold Corp, you do see higher grades at depth. And so we just keep pushing the exploration. We'll be spending $15 million there this year, 5 at Fox. We won't have to go to the market, which was killing us in the last couple of years because we missed on guidance on production and on cost. And that meant our revenue was a lot lower. We had some debt to service, and there was just a whole slew of bad news coming out.
But
And
tough times create opportunities, and you guys have definitely been going in the right direction for the last 6, 7 months. And
yeah.
any chance you might shoot for a lottery ticket deeper under those Timmins,
Oh yeah,
Rob?
I mean that's definitely in the cards. Um,
That's what
so
I like to hear. I remember Gold Corp, and I remember seeing at the PDAC you guys used to have the rock samples, and that rock was just filled with gold. And that's what happens when you get deeper and closer to the heat engine. You get that rock that's just riddled with gold.
yeah, it's beautiful to see and wonderful for the economics. I mean,
So So there's a lot of great things going on here from the McEwen mining side, on the gold side, that you're pretty much getting not much value for in the company. And a lot of it's coming from the copper side, which, I don't think Nuton bought in because they think it's a $500 million situation.
no, no, I would agree with you.
So,
And
you've been super kind with your time, Rob, and I always like hearing about McEwen and mining, and also your outlook and views on the metals market and what's going on in the world. Did you have something you wanted to close on, Rob?
I think everybody is seeing that inflation's with us, and I don't believe it's going away anytime soon. Um, with higher interest costs, all sorts of inputs become more expensive. And gold, silver are great places to put some money. If you're looking for other places, I'd say energy and food, because we need both of those. Um, Gold and silver have been, and actually copper was a monetary metal too. I mean, think of all those pennies.
See.
It's we're just in a good place right now. So
Well, I recently listened to the chap from he was talking about the metals, Ross Beatty at the
yes,
Vancouver Resource Investment Conference. He said he's never seen a time when all the elements on the periodic table were looking so good as they are now.
yes, excellent comment.
I think so. And another comment that keeps rolling around in my head is Robert Friedland saying this is becoming the revenge of the miners' time. And I think he's pretty accurate on that.
Well, it's a sector that's been underinvested in. In many cases, the small producers and the explorers have been dragging along the floor, totally ignored. I think you're going to see some consolidation in that space as people think they have to get more mass to attract attention. But right now, it's cheaper to buy ounces in the ground by buying a stock than drilling. So
Absolutely.
it's from my position, it's a great time to be looking at the juniors and starting to selectively buy them.
Those valuations in the ground are some of the all-time lows. It reminds me of the year 2000, before the 2001 to 2011-12 bull market got underway. And, often I think, Rob, that they throw all this money into technology and they don't realize to make everything work in the world requires mining.
It might be dawning on them slowly.
You don't get this, you don't get your car, you don't get your television, your computer, your fridge, your stove, your everything without the work of the miners. And so if you're putting, like, right now, I would bet you that Tesla trades on average more in dollar values than in the entire mining sector, including the majors and the juniors, on
Oh,
a
yeah,
daily basis.
yes, but they've done a wonderful job convincing the market that they are not a car company, but the supreme tech company. But tech requires our input as miners.
You got it. What a
Yeah.
great note to end on. Let me close it off, Rob, and we can chat at the other end.
Okay. Thanks,
So
Allan.
I'm a big fan of McEwen Mining. I like the gold story. It's not the first time I've seen a turnaround story in the gold space. I think they've got that happening now, and also they've got some lottery ticket potential at depth. Maybe Rob can find a version of Gold Corp underneath his Timmins stuff. I think it's I don't think that's pie in the sky. But the real driver lately has been the copper asset, and it's just getting better and better. Like Rob said, you know, Nuton, these guys are super smart. Rio Tinto is a very big mining company, and they do a lot of research on technology. And as they're doing that research on Los Azules, they're wanting to put more money in. I think that's a great sign. The fact that a car maker has put it in at a valuation of $38 per share. That's almost quadruple the original valuation that they were raising money on from the first tranche with Nuton. So that asset, I think, is a mine of the future, an important mine of the future. And RTZ and a car company seem to agree with that. Collectively, I think they've got a heck of a value group of projects, and they still only have a $451 million Canadian valuation. I think that creates a hell of an opportunity. And as always, it's important for you to do your homework, speak with your financial advisors, assess whether this kind of investment is suitable for you. And I'm a big proponent of doing that homework. Go on their website, check out their news releases, check out their corporate presentations, because if anything, McEwen Mining does a hell of a job of explaining what they're doing. And do that homework, because I think a well-informed investor makes logical and good time frames on their investments. And that's what has made Rob a great investor in mining. And I think it will make you one as well. On that note, have a great day, and we'll talk to you soon.